Hello everyone, welcome to the ESS BIZTOOLS webinar, where we're going to look at retail and wholesale business stock price manipulation calculator. It's a mouthful, isn't it? Stock mix pricing calculator. Adding value to retailers. Accountants can assist retailers about the variables that can cause roadblocks when it comes to being able to determine what the strategies are going to be in a retail or wholesale business because of the various types of stock that are commonplace in those types of businesses. So they have a wide variety of stock, different quantities, significant variations in markups. How do they set the system up to earn a targeted profit? This stock is referred to as star stock, which is high value and high markups. It's the sort of product that every retailer or wholesaler would love to be the only products that they sold within that star stock category. But unfortunately, for most of them, this is not practical in the day-to-day business world. They need to sell other products in the main to try to get them to attract foot traffic to their businesses. And the second category is cash cows. These are typified as being high volume but low markups. In a corner store, it's newspapers, milk, bread, those sort of common everyday products that if you're running a corner store, you've probably got to have, because people run out of them or they like to get their newspaper each day. But whilst they're in your store or your client's store, there's a possibility that they will impulse buy or actually go there looking for something else. But the cash cow items, high volume, low markups, are virtually found in every retail and wholesale business in Australia. Then we got the problem lines. These might have been star stock a year or so ago. It might have been last year's fashions, where ladies all wore red. It's a theme colour, but this year it's yellow. And it's very difficult to be able to sell products in that old-fashioned colour now, red. So they'll have to be marked down. Whereas a year ago, they were star stock with a high markup. And then we got the disaster lines. No one takes ownership of these, do they? They're the products that just happen to turn up, or so people say. This can be caused by a computer system automatically reordering, so you need to make sure your clients are aware of that. I've seen that happen. I had a client that one of their managers worked very hard in a jewelry business chain, worked very hard to clear a particular stock item. It took him nearly 2.5 years to get rid of these products that he swore they would never buy again. And I happened to be there one day working in the boardroom, and I heard this commotion outside, and I recognized the voice of this particular manager because I knew him fairly well. And I walked out and said, "What's wrong, Jim?" He said, "It's taken me 2.5 years," and I'll remove the adjectives out of this comment. It took me 2.5 years to get rid of these so-and-so products. And here's another 24 of them turned up, and they were huge vases and they cost a lot of money. And he said, we can't even give these things away. We tried. So what had happened when we inquired, the computer system had someone had ticked automatic reorder. So when it got down to only 2 left, the computer ordered another 24 for them. So you need to be careful of that. So they were disaster lines, low volume, low markup. Your clients, I think, better trying to get rid of those products as soon as possible. So the retailer's challenge is the mix of products and markups, getting them so that they're going to generate enough revenue to cover their overhead costs and to generate the targeted profit. And obviously their overhead costs is including labour. In the retail, in the professional services firm charge out rates and the tradies charge out rate calculators, which are in the same package as retail price manipulation to achieve a profit, we have treated labour quite separately, but in this one, labour is really part of the overhead expenses. And obviously the aim is to earn a targeted profit. We've developed a calculator to assist accountants to calculate what if calculations for your retailers. I was the chief financial officer in a listed public company that had about 250 or 300 retail outlets in various parts of Australia. And so I had some experience in being able to use an approach like this to help managers try to determine what they could do within their store. Because you can have a store that's selling a lot of product, but not making any profits because they're selling far too much of the cash cows. So you need to, if anything, reduce the cash cows, increase the star products, sort out the problem mines as soon as you can, and avoid those disasters. Get rid of them as soon as they appear in your client's stock ledger. But they do, they appear, they come from somewhere. It's the retail gremlins, I think. Okay, so what I'm now going to do is go to our site and bring up for you the form that we have developed, the product package to assist setting retail prices calculator. So we've gone to the introduction area and you would type in the name of your accounting firm, you've prepared this, and the name of your client that you're preparing the documentation for and date it. There's a set of instructions which takes you through the process. We have adopted a very similar procedure for labour in the first instance, looking at who the team are, and you've got quite a number of different forms you can use there to get the various employment arrangements that the business might have. So we're calculating the on costs, labour on costs, so that we can determine a labour budget, but the labour budget doesn't go any further in retail. There's no charge out rate being determined. We're going to look at the business's overhead expenses. What return on investment would your client like to achieve? In other words, what should the profit be? The system's going to look at developing a gross profit target that is sufficient to generate enough money to pay for the overhead costs, the labour costs, and earn the profit that the business would like to make. And then we have 3 workbooks that you can utilize to undertake what if type calculations for your client. You make variations on the quantity of stock items with particular awareness of what is a star stock and what is a cash cow and what is a problem stock, and obviously what is a disaster area. You want to get them out of the system as quick as possible. So the labour on costs are calculated in these sheets, very similar to what we've got for tradies and for professional firms. You start off with permanent full-time employees. You can type in who has got similar on costs, the same on costs. So that relates to their annual leave, if they're a shift worker, what the shift worker allowance is, so that we've given you plenty of opportunity to get these variables reflected for the individual classifications that they relate to. And in the system, we do have a worked example that you can have a look at if you're a subscriber, so you can understand how all this works. So we've got 6 of those classifications with 6 in each. So you've got 36 different arrangements or different type of employees that you can cover within the permanent full-time. Doesn't mean that these employees are on the same rate of pay. They're not. It's that they have the same on-cost arrangements. So their superannuation contributions are the same. The training days are the same. Long service leave entitlements the same, and so on. We've then got provision for permanent part-time employees. It's basically the same thing. And then we got provision for casual staff so that all of that can be calculated. And that is then reflected. The system automatically transfers much of the information. You have to insert the information in the yellow columns. The system calculates the remainder based on information that has been calculated in the labour on cost area and is automatically transferred. So it picks up these numbers, A1, A2, right through, and puts them in exactly the same order that they're reflected in the on-cost calculation. And that will end up calculating for us the total labour cost, which will be reflected here, and it will tell you what the labour cost is going to be for the business for the next 12 months. We then have the budgeted overhead costs. You can just put a figure in if you know what it is, but I think it's a good idea to list this because this is meant to be a document that you're going to send to your clients so they can see what you've included in the overhead costs. Obviously, it won't include any labour on costs because we've already brought that to account. So that's covering payroll tax, workers' compensation, long service leave. Our theory is that long service leave should be progressively built up as a potential cost for the business so that we are bringing all of the costs to account. We then have the financial analysis, and the financial analysis, first of all, wants us to look at what the return on investment should be. So what's the investment in this business? $500,000. What rate of return do you want? 20% or whatever. The system will then calculate the $100,000 as the profit target. And obviously you can undertake some what if calculations for the benefit of your client utilizing those figures. We then look at the gross profit that's going to be required for this business. So we've got what the labour costs are, the overhead budget, and the projected net profit. That needs to be, that is automatically transferred, and then the system calculates the total of that, which is the projected gross profit that the business is going to need to achieve the profit target, which we've just established would be $100,000. Sounds simple, doesn't it? The only problem is we've then got this stock mix. And based on that and what the sales have, what the history of this business is, you will then be able to insert what you think is the gross profit percentage that's going to have to be achieved if we're going to generate that amount of gross profit. Now that can be changed. It's an attempt to give us some guidance as to what's needed. I've now gone to the sales mix strategy. So how you would set this up is we have made provision here for 30 odd different departments. This was based on a retail business, supermarket. That's what I was trying to think of. You can, if you want added departments, let us know and we'll amend the document to include them. And what we would do in example 1 is go through and type in the departments, which would then be common right across, of course. You could mark it if you wanted it, and put abbreviations in there for whether it's a star stock, a cash cow, problem line, or a disaster, or whatever you want to call them, just so you're aware of them. And what you'd be inserting in this first instance is what the client tells you. They're the stocks, the main categories that they're buying. What purchase price do they think they're going to have to pay for that particular category? And what markup, so that obviously depends on the volume that they're buying. So that's the volume multiplied by the price that they're paying for those products. So that's their cost price. What markup percentage would they normally put on those products? The system will then show the markup. It'll show what the sales figure will then be based on that markup, and it will calculate what the gross profit percentage is on sales. And then it will total the whole exercise. And what this is telling you then in this analysis here is based on this, the sales would be a certain figure. The purchases would be the total of this column here. That's why we've got a total figure there. And the gross profit would then be determined, and the gross profit would be calculated. We know what the budgeted overhead costs and labor costs are. So the exercise would then tell you, based on what your client's saying to you, what the result's going to be. Are we going to achieve the target, or are we going to have to do some what if type manipulations? And the system will also tell you, based on this average gross profit that's now being achieved, how much more sales will have to be made to meet the targeted profit, which has been set at $100,000 in this exercise. So that's the first exercise that you do. You can then move across into example 2, whereby you can make some variations in what quantity or purchase price that's going to be made. So what the cost of the purchase is going to be for various items, so that you will end up then with obviously a different cost of the products. And then you can look at talking to the client and say, well, here you are marking up 75%, and you're telling me it's a star item. Could we move it up to 80 or 85% and see what the result is? The next one, you might have had that the markup was 100%. Could we look at featuring it in some promotions and try to get 120%? So you progressively work through each line. The purchase price might change a bit, because you might say to the client, well, why don't we buy a bit more of this product? And because it's a good earner. You reckon you're getting 130% markup. Could we buy a bit more? It's up to the client to say yes or no. Because what you're going to have then is the projection of what the sales would then be based on these manipulations of how much is going to be purchased and what the markup's going to be. And the system's going to calculate the gross profit percentages. And then down the bottom here in the summary, we're going to have the same overall summary as what we've got here, only there's going to be a different sales figure, different purchases, different gross profit. And it's then going to tell us what the profitability might be. So you might have been showing here a profitability of only $20,000. We might have now changed it to $80,000. So the system tells us how much more we've got to sell at that gross profit percentage. We then have a third column if you need to use it, example 3, whereby you might do some further manipulation with the client to give them an overall plan of what they need to achieve to earn their targeted profit. In this case, $100,000. What's got to be done? You might find that the turnover originally was thought to be about $3.2 million. It might now be $4.1 million. There might have been some other changes. In some instances, I've seen this where the turnover actually gets reduced because we are trying to sell more and more of the star lines. And the gross profit will vary, of course, but at the end of the day, the aim should be, as I see it, to earn the targeted net profit. What are we got to do to earn this profit that the business has set $100,000? And then when you finalize it, we insert it into here. We say we want to adopt example number 3, and the system will transfer. That's going to be sales and the purchase, the gross profit, and then the expenses of this. And this will then show us what we believe the projected profit's going to be and what it is compared to our target. Now, our target was $100,000. We may have now got $98,300, and the client might say that's close enough. If I can make $98,300 out of this business and pay all the bills, that will do me. I don't need to do any more what ifs and manipulations. So that's how the system works. To give you that information, there is a gross profit chart which is included because I found some retailers don't really understand the difference between markup on purchases and what we calculate as accountants, gross profit percentage on sales. Most retailers really only think about this markup on purchases because that's what they're dealing with. They're buying something for $100 and they're going to mark it up by 100%. So they're selling it for $200. And then we produce accounting reports, which tell them the gross profit percentage was 50%. I had a situation many years ago, I can probably talk about it a bit more now, where a client bought a business in a tourist area in Queensland. And he'd been the former CEO of a listed public company on the Australian Stock Exchange. And he told me that he knew it all and all he wanted to do was to have a meeting with me once a month to go through the accounts. And really that meeting, I found out after the first 2 meetings, he really just wanted to go cruising in his boat. Well, that was quite nice for a couple of times, but then I realized I couldn't really afford that time. And he ran into some problems. He rang me one day and said, can you come over to see me because I think I've got a problem. I'm running out of money. I'm selling a lot, but I'm running out of money. And what he'd done, he'd been told about markups and gross profit percentages. And he'd been told that overall he should be trying to achieve around a gross profit percentage of 50%. That's all he'd done the markups on. He'd use, in effect, these figures here as his markups. So obviously he had his prices very low. I said, didn't anyone tell you anything? He said, oh, we had a lot of happy customers. I bet they were happy. So that's the reason that this chart is in the system. I said to myself then, every client that's a retailer or a wholesaler is going to get that chart. And they can make up their mind whether they want to use it or not, because that was nearly a disaster in that particular business. He had enough brains to yell out to want to talk to his accountant quickly because he could see his bank account decreasing very fast, even though he had a lot of customers in his store. I really quizzed him about his staff that no one had told him. He said, well, to be honest, a couple did tell me. But I told him I was an ex-CEO of a public company and I knew how to do it. He'd obviously had accountants advising him in his CEO role in a public company. And perhaps he never had to do these sort of calculations previously. We also have in the system the long service leave calculator, which we're linked to. All you do back in that labour area is enter what state that this business is operating in, and it will then pick up the long service leave that applies. And they're very similar, except for South Australia and the Northern Territory, as you can see, but it will pick up the right state and it factors that cost into account. So that's how the system works. We've got a large number of our accounting colleagues utilising this system to be able to have what-if type calculations with their clients. If you've got any questions, you can send them through to me, or you can at peter@essbiztools.com.au. I'm just going to go back now and share the screen again so that we can continue where we were. And I've been through the what-if calculations, and I've given you an overview of the product. Tools to create opportunities. These webinars have been presented as part of a promotion, which we called Tools to Create Opportunities. This is a very low entry product package and cost to get you started on delivery of business advisory services. This is a special promotion that finishes on Monday, the 13th of December. Your investment upfront, $795, including GST, gives you 12 months access on a 24/7 basis. It's a great way to introduce a range of diversified services to your clients. Included in each package, there's 4 must-have products, compulsory to the package, because these are the key packages which will help you on this implementation phase of ESS BizTools. The business advisory services training, there's 13 modules which will take you and your team through the various challenges relating to diversifying away from annual accounts and tax returns into delivery of business advisory services. The Business Plus newsletter, there's 13 editions each year. There's 2 extra to cover an annual end of financial year document, which we produce in May, and we always produce a small business slant on the federal government's budget, which this year is going to be brought down in March. We have 343 papers, which we've prepared on 60 different categories. This is out of 580 papers in our total system. This package gets 343 of them. A subscriber can badge the papers, sell them or give them away to prospects and clients. And the SME needs analysis, which is a great tool, probably the most important tool in this whole system, which gives you a whole series of points that you can raise with a client. What's worrying them? What's keeping them up at night? What additional information do they need? What do they want you to look at? So it's trying to put the emphasis back into the client to sit through it and say, look, I don't think our debtors days outstanding is good enough. What can we do to improve it? I'm looking for some advice on succession planning. What should I do? And so on. That will give you the leg in the door to be able to really talk to the client then about the diversified business advisory services that you can implement for your clients. And then you select 3 additional products. You've got 4 which are standard, and you've got 22 out of our 32 packages that you can then select. We've got 5 editions of business health check over these various industry classifications. You can pick one of them if you wish. And then we got these: business planning, trades charge out rates, professional firms, retail and wholesale, stock mix pricing calculator, which is what we've just looked at, of course, buying a business. Client mentoring and coaching modules. This is information that you can send to your clients, which basically shows them the sort of services that you can now offer them because you're supplying business advisory services. Client seminars and webinars. Our total system has 36 pre-prepared seminars or webinars that you can present to clients and prospects. This package has 12 of those. Crowdsource funding, equity raising. Clients in small companies can raise up to $5 million as long as their turnover is under $25 million. Debtors management system, putting in a proper system, reducing debtors days outstanding. Early stage innovation company is great for young companies who have developed new properties, processes, undertaken research and development. Government grants identification through our other product, ESS Biz Grants. Leadership modules, the personal property securities register, which can be a disaster area for clients who are unaware of it, unaware of the problems you can inherit if you don't register on it. Selling a business, SME debtors systems manual, succession planning, survival in difficult times. 42 questionnaires to guide you through the process of mentoring your clients. And then 42 short articles explaining to the client what changes they might be able to make. Now you can obtain the full brochure on this package, Tools to Create Opportunities, product package, brochure, and the subscription form by sending us an email and we'll send it to you. peter@essbiztools.com.au. Please remember this package finishes on close of business Monday, the 13th of December, close of business in Western Australia. So that gives you people on the East Coast a few hours extra in which to get your orders in so that you can access this material. Our future webinar is on Thursday, the 9th of December. We have professional firms charge out rates. You can register for this webinar by going to www.essbiztools.com.au webinars. Please contact us, peter@essbiztools.com.au or telephone 1-800-232-088. And please visit our new website, our new upgraded website, www.essbiztools.com.au. Thank you for being with us today. Stay safe and have a great day. And I look forward to hearing from you as a subscriber to ESS Biz Tools. Goodbye. Thank you very much for being with us today.